All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about Volta Inc., stock ticker VLTA. They are a small cap, high growth EV charging station company. So we talk about the EV stocks quite a bit on this channel. We focus on the small cap, but we also talk about the large cap. So if that's content you're interested in, please remember to subscribe to the channel and hit the notification bell. Also, if everybody would do us a great big favor and smash the like button, it helps out the channel a lot. You will also see a link in our pinned comment to our free Discord, so you're welcome to join us over there. Okay, let's talk about Volta. I did a video on them about a month ago, basically saying that they were in a bit of a free fall. They currently have an interim CEO, so when things like that happen, that tends to drive down the price of the stock. And being that this is already a small cap, high growth EV stock, those stocks have been getting crushed over the last 6 months anyway. So the vast majority of those stocks are down 70, 80, 90%. And in addition to that, Volta has had its own specific issues. So if we take a look at this, you'll see its 52-week range. It was trading at $14.34. A few weeks ago, actually a few days ago, it got down to $1.65. So this has fallen dramatically. Now you'll see it's had a 2 or 3 day rally here. When we get to the chart, you'll see it's back up to $2.28, including it's up about 7.5% right now. Now we're in the middle of the trading day today, so I don't know where this will end, but this is where it's at right now. So this is actually day 3 of a 3-day rally, which for this stock and in this sector is actually quite a big rally. So what I want to do is dive in and take a look and see if we think we can expect this to continue or if it's time to sell and take some profits. So the first thing I want to look at is they came out with their quarterly earnings on Friday. So this was definitely a catalyst to boost the stock here in the short term. So let's go take a look at their Q1 2022 earnings report. Okay, Volta Inc. reports first quarter financial results. So this is the quarter ended March 31st, 2022. They issued this last Friday, May 13th, before the bell, so before the market opened. First quarter revenue increased 77% year over year to $8.4 million. Media, behavior, and commercial revenue increased 73% to $6.1 million. We'll talk about what that is in a minute. 39% year-over-year growth in the total installed stalls. So essentially, they have 2,548 charging stations out there as of March 31st, 2022. So that number is growing fast. They added new brand media partners, including Showtime, Zoom, and a list of others that I won't read. So I'm going to go to the front page of their website because it really shows right here. You'll see not only is this an EV charging station, but this is a rather large multimedia center where they have media partners who pay to advertise on this platform. Not only does a person charging see this, but this is a large screen, so drive-by traffic, etc., all gets exposure to whatever's being advertised on this. So it's a dual combination of revenue, and you can see the media portion of this is significant and growing fast. One of the keys to their business model is they partner up with organizations that have many different locations so that they can spread their network with these partners. So you'll see new partnerships with Tanger Outlets, and I may be pronouncing that wrong. I don't have any of those where I am. Tanger Outlets announced a plan to install Volta charger stations in 9 U.S. markets, unlocking 2 new geographies for Volta. So that's the other thing, is they're spreading the amount of geographies, in other words, the areas in which they cover. So this agreement provides shoppers with access to a mix of DC fast and AC charging with eye-catching charging stations located near the entrances of Tanger's premier outlets. The other one I want to mention is Walgreens. Obviously, Walgreens is a massive organization. Walgreens' partnership with 1,000 DC fast charging stalls at over 500 Walgreens throughout the U.S. This agreement furthers Volta's DC fast charging expansion strategy and Walgreens' support of initiatives that aim to lower emissions and make the planet healthier for communities everywhere. So that is a very big relationship for them, and it continues to grow. So this is the breakdown of their revenue, and you can see media revenue is actually, right now, that is the larger part of their revenue. That was $6 million in the first quarter. Network development was $2.2 million, so that's $8.3 million. That was above what the market expected, so they beat expectations on revenue. And this was important because, again, they have an interim CEO right now, and there was some turmoil in the past here. So for them to have a very strong quarterly earnings report sends a positive message to the marketplace and starts to reinstill some confidence that this company is going to go where maybe people thought it was going to go, and that this shakeup in management is not affecting their operations. The other thing they did, which instills great confidence in investors, is they gave their full year 2022 outlook. Based on current business conditions, business trends, and other factors, for the full year ended December 31st, 2022, the company reiterates guidance full year 2022 revenue in the range of $70 to $80 million. So they're reiterating that they are on plan, and you're going to see that represents massive growth. This company has a compound annual growth rate over 100% right now. They are growing. This is a very early stage, high growth company. Total incremental connected stalls in the range of 1,700 to 2,000. Total incremental connected sites to be in the range of 650 to 750 new sites. So they are on pace for this growth in 2022. They then gave further growth for the quarter to come, the second quarter of 2022. Based on current business conditions, business trends, and other factors, for the 3 months ended June 30th, 2022, the company provides guidance of second quarter revenue in the range of $13 to $14 million. So that's right on par with what the investment community was expecting. So that's kind of a reiteration of previous guidance as well. So these numbers, I think, more than anything else, really boosted confidence in investors, and you'll see when we get to the chart, it has caused a nice 3-day rally. The question is, how much further can this go? So I want to take a look at Volta's market cap versus a few of its direct competitors. Now, again, these are all EV charging companies, but their business models do vary slightly. So these are not identical companies, but they certainly are in the same space, and they would be considered each other's competition. So Volta has a market cap of $382 million. Out of the 4 major EV charging station companies, this is by far the smallest market cap. And you're going to see when we look at the charts, one of the reasons for that is that it has been beaten down significantly more than its direct competitors. So if we look at a couple of the competitors in this space, you've got Blink Charging, which has a market cap of $762 million. That's basically double the market cap of Volta. So that is a substantial difference for a company. When we look at their 2022 outlook, their sales forecast is lower than Volta's. If we just take a quick peek, you'll see that Blink is looking for 2022 revenue of $35 million, 2023 revenue of $66 million. And if you remember, we saw Volta just reiterated that in 2022, they're looking for $70 to $80 million of revenue. So to me, this is disproportionate. Volta has been beaten down drastically versus Blink. And you can see Blink is not looking to improve their profitability over the next few years either. So it's not like they're turning the corner and they're making money. This industry is still at the very beginning of its growth cycle. So these are super high growth companies, but Volta's actually projected sales growth is much higher than Blink's. So their sales are higher than Blink's, their sales growth is higher than Blink's, and yet their market cap is half of what Blink's is. If we look at EVgo, stock ticker EVgo, their market cap is $2.3 billion. That's like 8 times the size of Volta's. Now, again, all these companies have some different nuances to how they conduct business, but if we look at EVgo's sales projections, you'll see they're targeting $50 million in 2022. And again, Volta's targeting $70 to $80 million. And they're at 128% sales growth and 171. So this is a massive high growth company, but let's take a quick look at Volta. Okay, so you see there's 7 analysts that cover Volta, and they are targeting $72 million for the year of 2022. And we just saw that Volta themselves reiterated $70 to $80 million is their expectation. That's 124% growth. And then $151 million in 2023, that's 109% growth. So these are very, very high growth companies. So again, if you look at market cap, these guys are vastly undervalued versus their direct competition. And again, it's important to look at all 3 business models because they are not identical by any means, but they are certainly direct competitors of each other, and Volta has certainly been beaten down significantly more than those other 2 stocks and has the smallest market cap by far out of the 3. Let's take a quick look at the chart. Okay, this is the Volta chart on the 1-day time frame. So you'll see 3 green candles here, one of which they bottomed out on May 12th, which was last Thursday, the day before earnings. They bottomed out and ended up having a green candle on that day. The next day, they reported earnings prior to the market opening. So you can see they gapped up nicely and had a green day. And now today, Monday, so that was Friday. Today, Monday, they are having another green day. and they're currently up about 6.4%. So that is fluctuating throughout the day today. The market's fluctuating, obviously, as usual. But you can see this is a very strong 3-day rally, but all it really does is put them back to where they were on May 4th, which was just, a week and a half ago. So this company has been severely beaten down, and I just want to compare it to the other two companies. Okay, so when I look at Volta, this is on the 1-week time frame. When I look at Volta off of its recent high back in November, and again, that was not its all-time high. It was much higher in September. But if I just measure from the November high, they are down about 83% right now. If I do the same thing for Blink, they're only down about 64%, which is a big difference. And then if I do the same thing for EVGO, again, these are all off of the November highs, they're only down 55%. So you can see Volta has been beaten down much, much further than its competitors. So for me, even though this is a nice 3-day rally, I still think there's good risk reward left on this because this stock was driven down significantly further than its competitors and, well over 80% off of its November highs. Never mind its September highs. So if I go back to the beginning of April, this stock was trading somewhere in the $3.50 range. That would be about a 57% price increase if it could get back to that spot. And again, it was still down nearly 80% at that time. If I go all the way back to February 10th, which again, that is only 3 months ago, Volta was trading up near $6 at about $5.80. So if it could retrace its steps back to that number, then that would be a 155% increase in the price of this stock. So we don't know if a bottom is in yet. It's been a nice 3-day rally. It was a very good earnings report in my opinion. But again, this is not financial advice. We've seen this stock drop drastically over time. They're down 80+% from their 6 months ago highs. The other number I want to look at is just over this 3-day period, they're up 32%. So that is a very nice bump in a short period of time. But again, that still leaves them down 80% from where they were 6 months ago. I do own this. I have averaged down on this stock. So this is a stock that I feel good about. I think they're doing the right thing. They're moving in the right direction. But again, please, this is not financial advice. Do your own due diligence. This stock in particular, but the EV stocks in general are very highly volatile. They have crashed several times over the last 6 months. So, right now, this is a little bit of a 3-day rally. This may not be the best time to start averaging in. But I do think it's a great time to put this on your watch list and do some due diligence and see if it's a stock that you're interested in buying. So if you made it this far, please remember to subscribe to the channel and smash the like button. Thank you so much for watching, and we will see you in the next video.